Good morning. This is Robert Kaars Sijpesteijn bringing you this morning's market update. This week sets investors ready for the first expected interest rate hike by the US Federal Reserve in nearly a decade. On Wednesday, the announcement will be released as to whether the rates will be raised, as well as what form of future schedule will be set out. Despite the expected rate hikes, markets have still been extremely volatile, shown by jittery trading on Wall Street last week. All US indices dropped. The US 500 fell 43 points to close on 2008.23. The US Tech 100 shed 114 points to close on 4,532.63. And the Wall Street lost 346 points to close on 17,233. Looking at commodities, gold raised slightly on Friday, adding $2.50 to close on $1,074.30. Brent crude, however, dropped further, losing a little under $2 to close on $37.67 a barrel. Repsol, on Friday, unveiled an asset swap with Statoil that will involve selling a stake in America's shale-producing heartlands, the first such deal under a plan by the Spanish company to protect dividends after the oil price collapse. Repsol said it would dispose of a 13% stake in its Eagle Ford shale project in the US in exchange for a 15% share in the Gudrun producing field in Norway from Statoil. Spain's Repsol and Norway's Statoil are joint operators of the Eagle Ford project, leaving both companies struggling to secure economies of scale that would provide with the lowest possible costs. By buying the 13% stake from Repsol, Statoil will become the sole operator with a 67% interest. Repsol will own the remainder. Statoil said as sole operator of the Eagle Ford project, it would have efficient operations and cost savings, and thus more resilience to low oil prices. Analysts at RBC Capital Markets said we expect to see more deals like this across the sector as oil companies concentrate exposures and hope to increase efficiencies. Another example is oil giants Royal Dutch Shell and BG, who have cleared the final hurdle of their £47 billion mega merger to take place, as the Chinese Ministry of Commerce, MOFCOM, gave the deal the go-ahead. This follows approval given by authorities in Brazil, the EU and Australia, meaning the deal can take place. The two companies said they now hope the merger would be completed in early 2016, subject to shareholder approval. Shell Chief Executive Ben van Beurden said we're grateful to MOFCOM for its thorough and professional review of the recommended combination, and I am delighted we now have all the preconditional approvals needed to move to the next important phase. The deal was first announced in April this year, with Shell offering to pay a premium of around 50% on BG's share price at the time. The stock jumped more than 26% on the news. Moving to Europe, the Germany 30 suffered another hard day on Friday, losing 216 points to close on 10,267. The index has continued to decline following Mario Draghi's last speech regarding future quantitative easing, which did not live up to expectations. The UK 100 suffered the same fate, dropping 166 points to close on 5,908.9. In today's corporate news, BP is facing a class action lawsuit over the deadly Gulf of Mexico oil spill in 2010, after papers were filed in Mexico on Friday. Green King Chief Executive Rooney Arnold has been appointed non-executive director and senior independent director of Morrisons. And the UK government is considering nationalising the nuclear submarine business of Rolls Royce holding place, which powers its Trident missiles deterrent system, according to the Financial Times. Today's economic data in focus is Mario Draghi, who is due to speak at Pomeria's conference in Italy at 11 o'clock today. Other than that, that's all. So thank you for this morning market update. Thank you and goodbye.